Alright everyone, so hopefully you have gone through the sales budget lecture. Now we can prepare production budget. So as I have mentioned earlier, production budget of course it has to be based on the sales. So let's see how we can do this. So as I've said, we have done our sales budget and expected cash collections. So it's completed now. Now we can move forward for production budgets. Production budget, they have to be in line with your sales. So that means if we have a sales for let's say 5,000 units, production needs to be ensured that those 5,000 units are being produced. Normally company do always prepare a little bit of extra as a buffer stock so that they don't run out of stocks. So this is how it goes. So let's see the schedule of preparing the production budgets. Now, of course, you have this information before. Again, I need this information as well. So you can actually keep this information in your hand whenever you go through this lecture because everything is going to be based on this information. So you may not see this again, but keep this information in front of you when you watch the lectures. So for production budgets, my scenario is the management, of course, the manager of Royal Company wants their closing or ending inventory to be equal to 20% of the following month's budgeted sales in units. What does it mean? So of course that 20% ignore that this is not a fixed one. It can be changed, it can be varied. So of course this will be given to you all the time. But the fact is, what is this telling me? It's telling me that whatever the following month's budgeted sales in units. So I'm preparing my budgets for which quarter? Quarter ending on June. So that means April, May, June. So if I consider April month's productions, the productions will be based on the May month's sales, and that is 20% of the May month's closing sales. So that means if you are selling, let's say for example 1000 units in May, so your closing inventory for the April will be 20,000. That means 200 units for the April because of 20% of the following month sales. So whatever your sales budget for the following months, just take the 20% of it. That will be your closing inventory for the previous months. As usual, I'm been given with the data that on March 31st, I have 4,000 units on my hand. That means in March, I close my inventory account with 40,000 units. So when you are closing the month of March, when you're opening on April 1st, that becomes your opening account. So that means the closing of the March, the same amount that goes forward to April, on April 1st, that becomes your opening value. So that means I know that when I'm going to prepare my productions for the month of April, I already have 4,000 units into my stock. So I have to keep that in mind because I don't want to overproduce unnecessarily. So let's see my schedule, how we can prepare this. So of course, this is my budgeted sales. Of course, I have to need this because without this, I cannot prepare my production. So this was given to you earlier. So this is my budgeted sales. And then of course, my schedule are going to be like this. So here I have to add my desired ending inventory. So here the numbers will be based on 20% of the following month. So in April, I have to take 50,000 and multiply by 20% to get my desired ending inventory. Same goes for May, same goes for June. Then I will be getting the total number of production units that I have to produce. Then of course I'm going to deduct my opening or beginning inventory. So in April I have a beginning inventory of 4,000 because that was the closing for the March. So here I'm going to deduct, then I have to get my required productions. So that's how the schedule goes. So without going further, can you pause for a few minutes and give it a try just for the month of April or May? So let's just find out yourself that you can prepare this or not. So here is my April data. So in April, what I've done is I have added desired ending inventory, which is 10,000 from where? So in budgeted May sales, in May I have 50,000 and I said my closing inventory for the previous month always will be 20% of the 50,000. So that becomes 10,000 here. and that gives me I have to produce 30,000 units, but I already have 4,000, which is from the March ending inventory, because as I've said, the previous month ending that becomes the current month opening, and that gives me my total required production of 26,000. Now, as you have seen this now, can you please go for the month and try by yourself to see how you can get this? So in May, what I'm going to do is, of course, this 10,000 was my closing inventory for the month of April. Remember, this is not your closing inventory. Most of the time students get mistakes by consider this as a closing. No, this is your required production. That is the number of units that you have to produce in the month of April. And this is your closing inventory for the month of April. So as I've said, the closing for the April, that becomes the opening for the May. So in May, without doing the numbers, you can just copy and paste 10,000 here. And how I have got the 6,000, that is a 20% of 30,000. I haven't shown this yet here, but you can do this easily. So that gives me total requirement, which is 56. I've deducted 10,000, which is my already have in my stock. So I have now required production for 46,000. Now let's completing my schedule. So here I have 5,000. Now where do I get this 5,000? I've just put here some assumed figures. Of course, in your assessment, you'll be given data, because here the number will be based on which month, July. So you can actually get the your sales figure from the July, which is given already to you. You can get the 20% of July sales, then you can get the 5,000 as well. So all of this will be given to you. So here I again for the June I got my total needs, then I deducted my previous month opening inventory, closing inventory, which was 6,000 here. So that gives me total required production. Then of course adding them across I get these things. Now here before we close this thing, some key points here. So you see in the quarter, of course in quarter we do some across in terms of summative numbers. But for the desired ending inventory, you see I have taken only 5,000. If you are to add them up, let's say 10,000, 6,000 and 5,000, you would have got how much? 21,000. But that is absolutely wrong. Why? Because those number of units are actually eaten up by each month's budgets. So that means you are producing it, you are using it. Then in May, you are producing it, using it. Then when it comes June, you are producing it, but you haven't used because that is where you have shut down your quarter. So therefore, whatever the closing value for the June, that will be the closing value for the quarter. So if you have ever done this, summative as some summation, then of course the whole maths will be wrong. So don't do this at all. Take the closing only from the June as the quarter ending June. That is it. For the beginning inventory, you see I have taken only 4,000. That 4,000, you see the arrow mark here is based on this 4,000, because when you started this quarter in the month of April, how much balance that you have in your stock, I mean opening inventory, 4,000. So that becomes the opening inventory for the quarter. If you add them up, that is not your opening inventory. You are again doing the mistake. So therefore, don't take the summative figure for the quarter ending inventories. Take the one that you started with. So here I have started with 4,000. I have taken 4,000 in the quarter. That will be my opening inventory for the quarter. For the closing inventory or ending inventory, of course. So for the June, when I'm closing my quarter, I have 5,000. I have taken 5,000 here. So that is it. So you have to be very careful. There is no critical thing here. You just need to remember that I am closing my quarter, so I have to take the closing figure, which is 5,000 here in this case. I am closing my quarter, so I have to take my opening inventory at the beginning, which is from the April. So what was the number in April? 4,000. So I'm just taking this up and copy and paste it here. That's it. So that's it for the production. So in production, we don't have any cash yet, because cash is based on your materials. And so you can assume that your next budget will be the materials, because now we know how much production I have to make for this quarter: 101,000, 26,000 for April, 46,000 for the May, and June 29,000. Remember these three numbers which you need for the your materials budget. So now I can estimate how much materials do I need and how much money do I have to pay to buy those materials? That will be my next segment. Thank you.